everyone, and a very good evening. Welcome to the Money Show, the tax special being a Tuesday evening. I'm Avan Dabash, and over the next half hour, we will be getting all your questions on tax-related questions answered. Feel free to dial in to 022-675-49474, or you can email us on the Money Show at etnow.tv with any tax-related questions. Joining in today, we have Prakash Kotadia. He's a partner at BDO, joining in to help iron out all your tax-related questions. He will be with us over the next half hour. Our phone lines are open, so feel free to chat with us. Well, before we get to the questions and queries, and there are quite a few of them, let's start off by understanding certain and different aspects of taxes, and start off by talking about advanced income tax. Can you help us understand when this is liable, whom it is liable for, and whom it is not liable for as well?
Yeah, advance tax is something which SSC is required to pay during the year. There are 4 installments in which advance tax are payable. First starting from 15 June, second 15 September, third 15 December, and last is a 15 March. So by 15 June of the year, we are required to pay 15% of the tax for the whole year. By 15 September, 45%. By 15 December, 75%, and by 15 March, total amount of advance tax is payable. So generally, it is expected that at the beginning of the year, only income is estimated, and accordingly advance tax is paid. And if there is a change in the income, then again the advance tax can be readjusted in the subsequent installments.
So give us a sense as to when this is payable, for whom, like what category, and for whom it is not as well.
Yeah, advance tax is payable only for the assessees whose assess tax. Assess tax is a tax payable after reducing TDS liability. So after reducing TDS liability, if tax liability is more than 10,000, then only you are required to pay advance tax. Also, senior citizens who are not engaged in any business or profession, they are not required to pay advance tax. Otherwise, all others are required to pay.
All right, that's the take coming in on advanced income tax and the nitty-gritties. Remember, we have with us Mr. Kotadia. If you have any tax-related questions, you can email us on the Money Show at etnow.tv, or you can dial into the number. It's flashing at the bottom and the top of your screens. Well, let's get in our first email question from Mr. Rao. He says, I am taxed on the winnings that I made on a rummy game website. So that's obviously online. He said I lost over 10 lakh in 6 months with winnings of 2 lakh for which TDS has been deducted. I want to understand, what about the losses incurred by me? Can I claim relief for the losses which were 10 times more than my winnings? I think this is a very valid question, because a lot of people do indulge in online gaming, etc. And it's important to understand the tax implications as well. So money from winning online gaming, is that taxable, sir?
It is taxable. I think in question we need to little bit to make a modification. You stated, Mr. Rao, that your loss is 10 times of your income, but it appears that it's a 5 times. You have incurred loss of 10 lakh while income of 2 lakh. So far as winning from races, etc. are concerned, losses are not allowed to set off against the income. So your 10 lakh rupees loss will be lapsed. You will not be able to set off it against your income. And on 2 lakh, on which already, as correctly you mentioned, that tax has been deducted, I believe tax would have been deducted at the rate of 30% on that. So it is liable to tax at the flat rate of 30%, which will be payable. So net, you will not be allowed to set off your losses against this tax payable on these 2 lakh rupees.
All right, that's the take coming in. I hope we were able to answer your question with respect to gains made via online gaming. Well, we have our phone lines live, and we have a caller with us. Ashok Kumar is on the phone, and he's got a question. Hi there, Ashok. Welcome to the Money Show. What's your query?
Yeah, thank you for having me over. I receive employee pension fund, employee pension of about 25,000 rupees per year.
Okay.
I wish to know whether I can claim standard deduction against that.
All right. Mr. Kotadia?
Sorry, Mr. Ashok Kumar, I could not understand your question. You said you are receiving 25,000 towards what?
from the EPF as a pension.
Okay, so you are receiving, are you a retired guy?
Yes, please.
Okay, okay. So now you are receiving your pension.
Yes, please.
Okay, okay. And what's your question? This is a 25,000 per month, correct?
No, no, no.
A year.
25,000 per year.
Okay.
So can I claim standard deduction against this?
Yeah. So certainly, because pension is equivalent to salary, so you will be able to claim standard deduction, which is up to 40,000. But since your pension is only 25,000, so there will not be any taxable income. And in any case, Mr. Ashok Kumar, up to 2,50,000, there is no taxable income. So irrespective of standard deduction, there will not be any tax liability if you do not have any other income.
Okay, so 40,000 is the amount for claiming that standard deduction. I hope you got a little more clarity, Mr. Kumar, and you were able to get your question answered. Do remember, if you have a little more elaborate question, you can email us on the Money Show at etnow.tv. Well, let's move on. We have another live caller with us, and we have Madhav. He is connecting with us on the phone line from Thane. Good evening, Madhav. What's your question?
I have made some investment in... Can I talk?
Yes, go ahead. We can hear you.
Yeah. I have made some investment in arbitrage mutual fund. And
Okay.
more than 1 year has been completed. And I want to know this long-term capital gain, how is the treatment? Will it be 10% tax above 1 lakh long-term capital gain? That's what I want to know.
All right. So, arbitrage mutual funds, what is the LTCG treatment on this?
I believe arbitrage mutual fund is more of a equity rather than a debt. Correct me if I am not correct, because I am not very sure whether arbitrage is a debt fund or a equity fund.
Fund.
No, my question is whether it is a debt fund or a equity fund.
It is a equity fund.
Okay. So on equity fund, you are right. From the current financial year, there is a income tax has been introduced on that. So if your income from the long-term capital gain, long-term means if it is held for more than 1 year, then it is considered as a long-term capital gain. Then on that above 1 lakh rupees, capital gain above 1 lakh rupees, there will be a 10% tax liability. And if it is held for less than 1 year, then it will be considered as a short-term capital gain, and it will be added into your all other income and liable to tax at a regular slab rate.
All right. I hope we were able to answer your question with respect to the long-term capital gains and how it's applicable on your arbitrage equity mutual funds. Remember, our phone lines are open. If you have any questions, please feel free to reach out. Kushvinder Singh has emailed us. Now, he says, my mother is receiving ex gratia monthly financial assistance after my father died in December 2016 during service. He was a headmaster in the Haryana Education Department and was going to retire in 2020. Is the income that my mother gets tax-free because no TDS is being deducted by the department? And if it is exempted, then under which section? So can you just help him out as to what exactly is this tax treatment that the mother is receiving from the ex gratia monthly financial assistance?
Mr. Sukhvinder, whether this money what you are receiving is a lump sum ex gratia or you are receiving it every month?
See, this is an email query, so
Okay,
I'm not really sure about that. But let's assume both of the situations, sir.
Okay.
Yeah.
So there is a one CBDT circular of 1990 which has clarified that if any relative of employee who was in service and who has died, then whatever ex gratia or any compensation received by them in lump sum, then that will not be liable to tax in the hands of legal heirs. That's why this question is very important, because from your question it appears that you are receiving it monthly rather than a lump sum payment. Again, here I would like to add that although CBDT circular has clarified that only lump sum payment is not liable to tax, but there are judicial proceeding which has held that even though it is not a lump sum but a monthly, still tax may not be liable to tax. So in my view, certainly you should claim this as not liable to tax. litigation with tax authority may arise, but there are positive, favorable judicial ruling available. So certainly you will get relief at the appellate level.
Okay, so you've explained it in both cases with respect to a lump sum or not. I hope we were able to answer your question, and do remember to try and fill us in with as many details as you can, especially when it's a tax related question, because each one has a different rule applicable. Tell you what, we will take a quick break. Stay with us. We have Mr. Prakash Kotadia. He is partner BDO, and he is here with us to help answer all your tax related questions. Our phone lines are open, or you can email us. Stay tuned. Welcome back. This is the Money Show. It is our tax special, and we're in conversation with Prakash Kotadia, partner at BDO, answering all your tax-related questions. Do remember, if you want to get your tax fundas right, if you have doubts, if you have questions, which I'm sure you do, please do dial into the number that's flashing at the top and the bottoms of your screen, or email us on themoneyshow@etnow.tv. Well, let's revisit the first topic that we spoke of, Mr. Kotadia, about advanced income taxes. To what exactly is, applicable for non-payment of advanced income tax? Can you just clarify on that?
Yeah. For non-payment of advance tax, there is a provision for interest liability.
Okay.
As I mentioned that by 15th of March, you are required to pay 100% of your tax as advance tax. But if you have not paid, then under section 234B, there will be a tax interest payable on that starting from the 1st of April of the next year till you pay all the taxes, which will be at 1% per annum. Over and above that, for your installment default, as I mentioned that for first installment by 15 June of 15%, second installment of 45% by 15 September, third installment of 75% by 15th December. If there is a shortfall in the percentage of advance tax paid, then even for that shortfall also interest will be payable again at the rate of 1% per month. So if your shortfall is for the 15th June installment, and if you have paid by 15th September, then for the 3 months, 15 June to 15 September, on that shortfall, interest will be payable at the rate of 1% per month. And the catch here is there that if you not pay by 15th of June, and if you pay on 16th of June, then also you will be liable to pay interest for all the 3 months, that is July, August and September, and not only for 1 month. So generally it is advisable that if you have missed the deadline of payment of advance tax, then there is no need to make hurry, because in any case now you are liable for interest for 3 months. So you pay by 15th of September only rather than paying early. Also there is one more the differentiating factor is there. If your income is comprising of capital gain. Now capital gain is something which is not possible to estimate well in advance. So you can't pay advance tax because it's not the regular income throughout the year. So in that case, there is a leeway from payment of advance tax, that if capital gain tax is on in between the year, then whatever installment were there prior to that earning of capital gain, on that naturally you have not paid the advance tax, then you are not liable to pay interest on that shortfall, because at that time income was not there. But from the date when you have earned the capital gain, you have to ensure that by 15th of March you pay all your advance tax on that.
I hope that was a little more clarity with respect to advance tax. Let's move right on. We've got a live caller. Shyam is connecting with us from Chennai with a question. Welcome to the show, Shyam. What's your query?
Yeah, you see, I am an individual.
Okay.
And I pay a rent of 70,000 rupees to a non-resident owner. 70,000 per month.
Right, you pay rent, right?
Yeah, I am paying rent to a non-resident owner. Yeah, and my question is, do I have to deduct any TDS on that? Because my reading is that it's applicable only to residents.
Okay, so any TDS, he's a non-resident owner, 70,000 rupees per month. Is there anything applicable?
Yeah. I believe, what's his name, Mr. Shyam.
Yeah.
I believe probably you are referring a section for the TDS on a rent which is applicable to resident, and that's why you have a feeling that in case of resident only that TDS requirement is there. I would like to clarify here that for non-resident that section is not applicable, but for non-resident section 195 will be applicable. And as per section 195, irrespective of what nature of payment is there, if that income of non-resident is liable to tax in India, then TDS is applicable. So whether it is rent or any nature of income, if it is to a non-resident and liable to tax in India, then TDS is applicable. And coming back to the section which you are referring, that is applicable to resident, although it's not your question, but I would like to clarify that. In that case, if rent payment exceeds rupees 50,000, then 5% TDS is required. So in your case, even percentage is not prescribed. It will be at the rate which is applicable to non-resident, and that means a regular tax rate, and on that you have to deduct tax.
I hope you got a little more clarity as to what your case is, Mr. Shyam, and what the tax requirement is. Mangesh Kulkarni also is now joining in, and he is on the phone line from Mumbai with a question. Hi there, what's your query?
Hello.
Yeah, Mr. Kulkarni, what's your question for Mr. Kotadia?
My brother is retired from the collector of Mumbai city, and when he was in service, in the financial year 2008-9, 9-10, 10-11 and 11-12, they have deducted TDS, and it is shown in the form 16.
Right.
However, it does not reflect in the form 26AS.
It does not reflect.
Yeah, it is not reflected in the 26AS. So what is remedy for it?
Yeah, Mr. Mangesh, first of all, I would like to understand that why presently you have some issue related to 8, 9, 9, 10, 10, 11. Is it something like the tax authorities have reopened your case or something?
No, because 2-3 years we are corresponding to that collector of Mumbai office, but they have not given any response. So we also intimated this fact to the AO, respective AO, but still it is outstanding, shown in the, it is not shown in the 26AS.
No, my question is that even though it is not in 26AS, but what's your pain point? Do you have any tax liability arising today?
Yes, it is tax liability. They have shown in the notice 143-1A that your so-and-so amount is outstanding from so-and-so in financial year.
Okay. So, but you will have Form 16 issued by your employer?
Yeah.
So, in Form 16, your TDS is correctly reflected?
Correct.
Okay. So, I will tell you, see, first of all, Form 26AS, that has started only, I think, from assessment year 10, 11 or 11, 12. Prior to that, it was not there. So, that is one of the reasons why it is not there. Secondly, if it is not reflected in Form 26AS, that means employer has not correctly filed his TDS return. But if it is reflected in your Form 16, then certainly you can submit Form 16 and assessing officer is bound to give credit on the basis of Form 16.
There you have it. I hope you got your question clarified, Mr. Kulkarni, and thanks very much for connecting with us this evening. Next up, we have an email query from Anuj M. He asks, what is the tax liability when a property is sold at a loss? Mr. Kotadia?
First of all, if it is sold at loss, then certainly there cannot be a tax liability because it's an income tax and it will be payable only on income. Here I would like to bring to your notice that while computing loss or a capital gain, like in your case it is a loss, please ensure that your sales consideration, whatever you are considering, is equivalent to the stamp duty valuation. There are cases where your agreement value is lower than the stamp duty valuation, but as per the income tax law, for computing capital gain, irrespective of your actual sales consideration as per the agreement, you have to pay tax calculating from the stamp duty value. So even if after taking stamp duty valuation, still if there is a loss, then there is no tax liability, and you will be allowed to carry forward this loss to set off against future any capital gain.
There you have it. That's the call coming in, and you know, with respect to the property that has been sold. I think we do have a live caller. Yeah, Mrityunjay is with us and he's connecting on the phone line. Good evening. Welcome to the show. I believe you have a question. What is it?
Good evening, ma'am. Actually, I wanted to know, my annual salary is 1 lakh rupees, madam. I am government employee, madam. How can I save my tax, ma'am?
If your annual salary is 1 lakh, then there is no tax liability. You need not worry.
Sorry, 10 lakhs, sir.
Okay. So your question is that how do you reduce your tax liability, correct?
Yes, sir.
Yeah, so there are various provisions under Income Tax Act where you can claim deduction like payment of life insurance, contribution to Provident Fund. Since you are a government employee, I believe that you will be covered by Employee Provident Fund scheme. So these all, whatever contribution you make, apart from that Mediclaim premium, then contribution to NPS, National Pension Scheme. So this all deduction you can claim from your income. Also, since you are a salaried employee, in this 10 lakh rupees, if there is a breakup and you are getting HRA, LTA, then also you can claim deduction for that. If your employer has not bifurcated your 10 lakh salary into HRA or LTA, etc., then certainly you should ask for that. And on that component, subject to prescribed condition, you will be able to claim the deduction. So your tax liability certainly can come down substantially.
All right. I hope we were able to answer your question, Mrityunjay. Thanks so much for connecting with us. But that's all the time we have, so we'll wrap it up. Thank you so much, Mr. Kotadia, for taking time out and joining us in our studios. Remember, if you still have any questions, every Tuesday we have a tax special. You can email us on The Money Show at etnow.tv. Thank you for watching.